Hey everybody, welcome back to the weekly market analysis, coming at you a day earlier for the week ending March 28th, 2024. I hope you guys have a great long weekend. The normal markets are closed. I'm honestly not sure if any futures markets or anything else is going to be open tomorrow. I know crypto is always open, but in any case, we're coming at you a day earlier with the weekly market analysis. And just as an update for those of you, if you follow this channel and you follow my weekly newsletter, which you can find at befinanciallyfree.substack.com, the newsletter is going to come out a day earlier because of the Easter holiday, so it will be coming out on Saturday at some point instead of on Sunday morning. So just wanted to put that out there. So again, I hope you enjoy this long weekend. And happy Easter to those of you who celebrate. I want to remind you before we get into the video for the week to hit the like button and subscribe to the channel. And other than my Substack, you can follow me on Twitter at Mr. J. Thomason. And links to both my Twitter and my Substack are in the description of the video below. And so today is the close of the first quarter of 2024. And what a quarter it was. If you look here, I've actually got, let's see if I can get rid of this here. I've actually got, I had this set up better a little bit ago. This is the year-to-date performance of the of 7 of the major markets, or I guess 8 of the major markets. We've got the S&P, the NASDAQ, the Russell, gold, the dollar, the 10-year treasury yield, and crude oil. And so actually, if I go over and I pin this to a new scale, the Bitcoin scale will be by itself, because Bitcoin year to date is up 51.21%. That's the Bitcoin futures. Obviously, it's a little bit different if you're looking at the non-futures products that you can find on TradingView. But I mean, if you just generally look on this, you can see the zero line right here where my mouse crosshair is at now, the gray line towards the bottom. Everything is up, and that includes the dollar and treasury yields on the year. But no matter what, it hasn't been able to stop the markets. You can see crude oil is up 17.5% in 2024. S&P is up 12.09%. Gold is up 10%. The NASDAQ up almost 10%. The Russell up 7%. The 10-year, which I'm tracking here in the green, up 4.87%. And the dollar up 2.3% year to date. And so what I find interesting is that it's the S&P 500 that is outperforming rather than the NASDAQ. And so one of the things that I think is interesting about that is that normally, at least basically since the GFC and the early 2010s, the NASDAQ has been the outperformer because it's been more tech heavy. So usually when markets go up, NASDAQ outperforms to the upside. But so far in 2024, the S&P is actually outperforming, and that's probably, at least to a degree, as a result of what's been happening the last few weeks. And so we'll jump into it in just a second. So a couple of things that we're wondering. So with Q1 as hot as it was, the question that is on everyone's mind now is, what will Q2 bring? Is Q2 going to bring more of the same, or is it time for some downside? And obviously, it depends on who you ask, the result or the answer that you'll get to that question, because many people who have been underinvested, particularly in the stock market, would tell you, oh, we're due for a correction. And, like, honestly, like a lot of people have been saying we're due for a pullback. Well, let's not include, let's not include the whole run up since the 2022 lows. Let's just go from November. We've basically been 6 months, about 5 full months, 1, 2, 3, 4, 5, 5 full months, where it's just been up only, basically, with, I don't think we've had at any point a 2% drop. It doesn't look like it. No 2% drops. On the S&P, we haven't had any more than, I think, like 4 down days in a row. And it's just been like straight up and to the right. Actually, it's pretty crazy on this. It's literally up and to the right. And so, the questions we have to ask ourselves is, and again, you can't assess based on what you want the market to do and what you think the market should do. It's really just about what the market will do given the macro backdrop, given the technicals, given the current momentum and trajectory. You have to ask yourself, like if you take physics, an object in motion will stay in motion unless it's acted on by something else. And so this move, it's in motion, all right, momentum like crazy. And the question is, what is it that's going to act to disrupt and disable and turn this momentum the other direction? And so first for starters, on the S&P 500, we've got this trend line. This is the prime trend line right now. As long as price doesn't break down from this trend line, then the trend is intact. In terms of the underlying technicals or momentum, I would say that this is overbought. We are at about 69 or 68 on the RSI on the futures, which is pretty overbought, but it's basically been at that level for since mid-November. It's been more often at this level than not at this level, at or above, I would even say, a vast majority of the time. You've got your MACD, which is, look at the size of the momentum shifting on the histogram. It's like barely visible. You can't even see it. And the signal lines have been on the upside for all this time, again, since mid-November, and haven't really moved a whole lot. So trend momentum is extremely strong, despite being quote-unquote overbought. The strength is still there in the market. And so, it doesn't really seem like it's going to be much of a thing, that it's going to take something pretty significant, I think, potentially it's either going to be like a exogenous black swan, like, oh my gosh moment that causes everybody to rush for the exits, or it's going to be more of a process, which pullbacks and corrections tend to be processes. You don't, I've been hearing lately, Shapiro on his channel has been talking about how you don't wake up one morning and the S&P is down 20, 30, 40%. So corrections take time, and crashes definitely take time to start unfolding. And so there's no sign of that right now, at least on the S&P, which closed barely up, which means it closed barely at another record at 5308.50 on the futures. Specifically on the S&P, one of the things that was notable to me, I've been tracking this in my newsletter, is we in the first month and a half of 2024, even as markets were heading up, we had a pullback in breadth, and then we basically hit where approximately 50% of stocks were above their 50-day moving average, and that was enough, and we've been basically heading back to the upside on this momentum and breadth indicator ever since then. And now we're back to the point where I'm going to be looking again for once we get up to around the 90 level, looking at some of the other technicals to see if things match up in such a way where we can expect any sort of reversal. Back in end of December, we were at this level, and it honestly didn't mean anything. We had a couple percentage points back at the beginning, end of December, early January. But despite the fact that breadth was deteriorating, the markets were still going up. So just because it hits up this direction, it gets up to the 90 level, doesn't mean that the market must pull back. But it is something that once you start getting up to these levels above 85, you start looking, okay, is sentiment overheated? Are there technicals that are overheated? I did notice, yesterday, on yesterday's price action, which had just this incredible, if I go back to it, had just this incredible close. If I go back to the 1 minute chart, it was, let me see if I'm going to be at the right spot. Wednesday, yeah, that's right, it's Wednesday. Yesterday just had this incredible, last 40 minutes or so. So if I just go to the market hours, like normal market hours, here we have about 6:30 on the left. and it just was down and grinding sideways, and then just in the last 40 minutes, just boom, it was up like 40 points and closed up really, really high. But yeah, on that particular day, when it came to breadth, the breadth indicator jumped 13% on the shorter term momentum, and then yesterday on the longer term breadth momentum indicator, it was up almost 5%. And this level on the stocks above their 200-day moving average in the S&P 500 is at its highest level that we've seen since the third quarter of 2021. And you can actually see this indicator got up really, really high. It got up to 96, 97. And so this can go up a lot further. And one of the ways that I like to look at the rest of the market too, to see if this is confirming or if it's conflicting, is to also look at the Russell 3000, which includes the S&P 500 as well as 2,500 other stocks. And the breadth has been improving on that as well. If you want to narrow down to the Russell 2000, that breadth was not doing so good, and it's actually been getting better the last few days. And I kind of buy into the idea that people are trying to buy the laggards. I mean, the Russell is still pretty well below its all-time high, from 2021, and so a lot of people who are too afraid to buy the S&P 500 here or the Nasdaq at its current levels after the run that it's had, they're all buying the Russell because it's cheaper and it's underperforming, and that's usually not a good sign. Once you start getting people who are beginning to rush into things that were lagging or things that are just on balance cheaper, then one of the things that you have to watch out for is the possibility that, I think they're chasing the Russell and the laggards. This could go for another couple days or weeks or maybe even a couple months, but the likelihood that the Russell or like that any of the laggards are going to catch up, truly catch up, I don't buy that. I just noticed this little those touches that trendline works. Sorry, just kind of got distracted by seeing this in real time. So that's kind of interesting that we got that closed. So I'll be watching that. I'll just leave it there. I don't know if it means anything, but I'm going to leave it there, and we'll just see. We'll see what happens on that. Speaking of laggards, I'm going to go to the gold chart for a second, because gold has been one of the best performing assets in 2024, and a considerable amount of that performance has come just in the month of March. Actually, literally just in the month of March. If you actually look, January was down, February was up 0.25%, March was up 9.24%. So that's a lot of the performance of gold has come here in this month alone. And I would just like to go back on record and talk about how back here in April, when everyone was screaming about how all-time highs were imminent, how I kept saying, nope, not in 2023, not until 2024. Now, I thought there was going to be a recession. There hasn't been yet, so obviously I was wrong about that call. But other than, December 1st, and then the spike December 4th, and then December 27th, I was pretty much right for 8 months or 9 months. So while everyone is screaming, crying about gold, the best top signal was, I think back here in like mid-April, Jordan Peterson had Peter Schiff on his podcast to talk about why everybody should buy gold and why gold all-time highs were imminent. I was like, yeah, that's a top signal. And then, of course, it went down for a lot of the rest of the year. In any case, gold is going up, and everyone and their mom is buying it now and talking about it now, and so I was bringing up laggards because people are starting to buy GDX, which is the gold miner ETF. Which, if I overlay, let me overlay GLD on the chart. If I just go year to date, GDX is severely lagging. GLD, and so people are buying GDX because they're like, oh, it's got to catch up, and people are let me get rid of that, sorry about that. People are also talking about buying silver because, oh, silver has to catch up. I mean, silver, by the way, still hasn't made a new, let's see, it's at yearly highs, but it has not made a higher high than 2023. It hasn't made any higher high from 2022. It hasn't made a higher high from 2021 or 2020. It's well below its all-time highs at 50. And people will talk about manipulation, but silver is super crowded. The silver trade is really, really crowded right now because everyone is buying the laggards. Everyone is trying to pile into silver, hoping that it will catch up to gold. And this has largely, up until March, this has been a fool's errand. I mean, even just look at in the month of March itself. We're not even up near the highs on silver that silver made. Silver made a high 25.77, and it's well below that. Go back to gold. Gold closed the month on its highs. So, you might as well just buy gold. Might as well just buy the S&P and not buy the laggard, because I'm sure you could imagine what will probably happen if the S&P or gold takes a dip. Those other ones are probably going to get hurt. Now let me talk about the NASDAQ for a minute. The NASDAQ has not made on the futures. I'm looking at the futures. Let's see. Let me look at the intraday highs really quick. 18,709, 18,691.25. Okay. So the NASDAQ has made a new intraday high, but has not closed above the intraday high from Friday, March 8th. Now, why is that day important? If I actually readjust this, let me turn my drawings off for a second. If I readjust this for the closing for the futures contract adjustments, this wasn't a bearish engulfing candle, but it was a definite big time reversal candle on Goldilocks data, and it was led to the downside by the semiconductors. So let me go to SMH, and so the semiconductors, which have been the darlings and the leaders, had an outside bearish reversal and filled one of its many gaps in that one trading session, and it has not made a new higher high since. And I bring that up because the S&P 500 has made new highs since then. The NASDAQ has not, at least on a closing basis. I mean above the high of that day. Obviously, there was a high, a new closing high. Actually, not if you look at the adjusted prices. Anyway, getting off on tangents here. So, and then the darling, which is Nvidia, also, I mean, it has not pierced that high yet. So, until this high gets taken out, my caution flag is up on the NASDAQ and therefore on the markets overall. It's not to say, I mean, obviously the S&P is, on all-time highs. I'm not saying to short it, but I am saying that that weakness is lingering, that there's weakness that is seeping in, and I think that we have to be cautious because let me look at my probable range indicator. So the probable range indicator is still green, so that's good. Tide indicator losing momentum basically in the week exactly following that reversal candle. My overlay, it's green right now. We'll see how long it stays that way. But point being that if this goes down lower, I mean, just look at the run, by the way, that semiconductors have had since mid-October. If these don't go back up, if these come off, it's going to put pressure on the overall market. And so I think that that's something that you have to be aware of. So I'm not bearish from the standpoint of like, oh, I'm going to go out and short this thing, but I am cautious here. I don't think the risk to reward of being long, despite the S&P being at all-time highs, is good. I don't think aping into the Russell right now is a very good idea. And the Dow, despite what's been happening, has also been an underperformer as well, because the Dow is also really crowded. And then at the end of the day, too, I mean, if you look, the dollar this week just confirmed a new bullish tide cross. You can actually see. I don't know why the flag is not showing up, but you can actually see we got our bullish tide cross. So this is officially for me caution zone. Okay, again, it doesn't mean you go short the S&P, but the dollar is now in bullish tide, and so are Treasury yields, and that's a double whammy. The last time we were in that state, if we just go from, excuse me, if we just go May 2023 till, to the peak of the yields in October 2023, and then we go to look at the dollar. So we had, let's see, the dollar crossed in September. So between September and then mid-October, I mean, we know what happened. Markets were down 10%, yields were blowing out, and all that. So it's not a great situation for asset markets. It's potentially going to put some pressure on and some headwinds to risk assets. So I would be remiss if I didn't call that out. I did think it was interesting. We almost closed the week on a 12 handle again. We closed exactly at 13 on the VIX. Low volatility is typically supportive of asset prices or of continuing bullish movements in asset prices. And then I want to talk about Bitcoin for a second, and then I'll jump off here. The thing with Bitcoin that's interesting here is that, I still think that the biggest thing here is time. Often after huge runs in Bitcoin, the time that it takes for corrections to take place, it can be somewhere between, we'll say around 30 days, give or take. And we made an intraday high March 14th. So it's basically been 2 weeks. So 14 days. So this could continue to correct for another 2, 3, 4 weeks. And it wouldn't be at all surprising. And I think that's something that people are not considering. People think that, like, I saw people back in, on this big, huge up day, this 10% up day on March 24th, I saw all these podcasts saying, oh, that was the bottom of the move. Everybody get back in. And then it's funny because I see these people who are pointing out, let me turn this off. So this red line, this red horizontal line, people are, it's touched it once since coming back above it in the last few days. It wicked below it once. And everybody, I literally saw like 3 or 4 charts today on Twitter. And I didn't even look very much on Twitter, but I saw like 3 or 4 charts where people were saying, oh, it looks like Bitcoin's establishing the old all-time high as support. And like, yeah, maybe, but also, what do you make of these 4 wicks to the upside that Bitcoin can't seem to break higher and stay up from that spot? So I mean, and I'm not saying I am medium term and long term bullish Bitcoin, but I think that people are underestimating the possibility. Let me turn the log back on. Underestimating the possibility that this could pull back further, that it tends to have a pretty strong pullback before the halving. So that's something I'm going to be watching for. I'm long. I have a core long position, but I don't have a trading position on right now because my rules dictate that I don't. But I'm cool with it going up. I'm just concerned that people are, all the crypto people are coming out telling everybody that they're going to have fun staying poor again, and I'm like, you guys, this is the kind of euphoria or the kind of sentiment that usually marks near-term or sometimes long-term tops. I'm not saying that this is the top of the move. I don't think it is, but yeah, I just think that it's important to call that out. Anyway, that's all for today. I'll leave you guys. Have a great long weekend. I'll see you guys next week.